Moving into the back half of the trading day, and markets are wrestling with a pretty mixed narrative right now. Upbeat stories in crypto and select industrials on one side, and some loud warning bells on sentiment and bonds on the other. I'm Grant Mercer, and this is Storm Stock Solutions, here to keep some clarity through the chaos of today's tape. Let's start with what's grabbing attention this hour. According to MarketWatch, Salesforce is back in the spotlight ahead of earnings with a big question. Can it finally shake what some are calling its AI curse? The concern has been that AI tools might cannibalize traditional software spending. The piece notes that to calm those fears, Salesforce will need to show real adoption and monetization of its Agentforce AI products. Traders in the broader software complex are watching that closely, because the message Salesforce sends on AI, threat, or turbocharger can ripple across the entire enterprise tech space. On the macro side, there's a fresh twist in the policy story. Reporting from MarketWatch by Vivian Liu Chen highlights that prediction markets are now touting Kevin Hassett, currently director of the National Economic Council, as a leading candidate to replace Jerome Powell at the Federal Reserve. The key issue: a new Fed chair could change the balance between fighting inflation and supporting growth, and that could turn bonds into a far riskier asset than investors have gotten used to over the last year. Markets will be watching not just who gets the job, but what it means for the path of rates, yield curve shape, and the role of bonds as a ballast in portfolios. In terms of strength on the board, crypto is back in the narrative. A MarketWatch piece from Jurka Dumovic points out that for big players, especially governments, Bitcoin is increasingly about power, not just price. The idea is that some countries are using crypto to gain geopolitical clout and a bit of independence from the dollar system. Traders see that as part of the longer-term bullish thesis: adoption and strategic use by states and large institutions. It doesn't erase volatility risk, but it helps explain why Bitcoin can keep finding support even after big drawdowns. Now, on the flip side, we've got a pretty stark caution flag on overall market sentiment. Mark Hulbert, also writing at MarketWatch, says one of his closely watched indicators is flashing a goodbye bull market signal. Market timers, by his measures, have reached extreme exuberance, which historically has been bearish for both stocks and gold. That doesn't mean an immediate crash, but it does say that positioning is crowded, optimism is high, and historically that's when downside surprises can sting the most. This is an area to handle with care, especially for traders leaning heavily into momentum. There are also some under-the-radar stories that could matter more if they start feeding into policy or corporate strategy. One piece from Jeffrey Sonsenbacher at MarketWatch looks at how immigration policy changes can create long-term financial harm to U.S. citizens through higher welfare dependence, lower productivity, and ultimately lower GDP. That's not something that moves the S&P in a single session, but it's exactly the kind of structural issue that can influence long-run growth assumptions and fiscal debates. Another sleeper theme is the ongoing EV reset. William Gavin at MarketWatch highlights just how rough the come-down has been in pure-play EVs, but notes one bright spot: automakers are leaning harder into hybrids as a bridge technology. For investors, that's a reminder that the clean energy transition isn't linear. Capital might continue to rotate within autos, from high-growth EV narratives back toward hybrid-heavy incumbents and suppliers that can monetize a slower, more pragmatic transition path. One name-specific mover worth keeping on your radar: Boeing. MarketWatch's Claudia Assis reports the stock is helping lead the market higher today on expectations that next year's cash flow will finally turn sustainably positive after a tough stretch since 2023. With Boeing, a lot of the story comes down to execution, production stability, regulatory comfort, and delivery schedules. But the improving cash flow narrative is giving the broader industrial and aerospace complex a bit of a tailwind. As we move into the next hour, I'll be watching three things: any fresh headlines or price action around Salesforce as we get closer to those earnings, the bond market's reaction to this chatter about a potential change at the Fed, and whether that exuberance indicator starts to show up in actual selling pressure, or if dip buyers keep the bull narrative intact into the close. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.